Hello, and welcome to this week's episode for Conservative ETF Investor Stock Market Update for the week of May 27th, 2017. My name is Ken, and currently we're looking at the homepage for Conservative ETF Investor. Once this video is done, I'll upload the link right here on the homepage, so this way you can click right on it. Scrolling down right on the homepage, we have our current ETF recommendations, and we are currently still sitting in a hold posture for all of the 7 ETFs based over 5 different asset classes that we watch here on Conservative ETF Investor. And you can see what our total ranks are and our total percentage returns, which includes dividends. This over here, percentage return, is without dividends. You can see that the best one by far has been the NASDAQ, which has given us a whopping 42% return. Now for the portfolios, since our buy recommendations, our portfolio has had a return of 14.33%, and on a year-to-date return, our year-to-date return is 7.14%. So it's very close to the S&P 500. So those are our returns. And getting back over to our website for Conservative ETF Investor, you can check out on our Portfolio Ideas tab. You can check out what our recommended portfolio allocation is, what the symbols are, and what they represent, and everything like that. So we monitor 7 ETFs, starting with the S&P 500, symbol SPY. We recommend a 20% allocation. For technology, which is the NASDAQ 100, symbol is QQQ, we recommend a 10% allocation. Underneath that is the Russell 2000, symbol IWM, and we recommend 10%. And then for our diversification, we want to go to the all world excluding the United States, symbol VEU. We recommend a 15% allocation. Now, on the fifth one down, we've got I monitor the 20-year Treasury bonds, symbol TLT, and I recommend a 25% allocation. But because it's a bond fund, that 25% of your portfolio, if you just bought bonds directly, would be a little bit less volatile and a little bit more of a sure thing. But since everyone could be buying the different bonds, I have to monitor something. So I monitor the 20-year Treasury bond, symbol TLT. And then for our real estate exposure, we look at a REIT, which is a real estate investment trust. And this is by Vanguard, symbol is VNQ. And this dividend right now, I think, is at 4.3% annually, which is a very good dividend, and we recommend a 15% allocation there. And for a precious metals, we look and monitor gold, symbol GLD, and we recommend a 5% exposure to the gold market. All right, so that's our website for Conservative ETF Investor. Back here on the home page is where you'll get your video link, you'll get your current recommendations, plus you can just click here for current recommendations as well. And if you want to drop me a note, you can contact me and send me an email message down here as well. Okay, let's jump right into the charts to see what's happening with the stock market this week. Our first symbol that we want to look at is SPY, which is the S&P 500, and we monitor the weekly charts. Let me get rid of that inspect mode. We monitor the weekly charts right here. You can see we're on a weekly chart. Our time horizon is a 5-year time horizon. So each one of these bars represents 1 week. The trend lines, that's these blue dotted lines, it tells me, gives me an idea of what's happening and where my specific points are that I'm looking at. These two lines here tells me that the ETF is trading in a rising wedge pattern since sometime around the end of 2015. And so it's clearly in a rising upward trend, and we are right in between these two support and resistance lines. For the week, the S&P 500 had a good week, 1.43%. Coming down here at our momentum indicators, and you can see it over here in the thumbnail. There's the top one here is the MACD at default settings, and the bottom one is the slow stochastics at default settings. Now, you can see that the MACD has bottomed and is beginning to rise and getting ready to cross its signal line. If it maintains this momentum going up, it's going to cross that signal line going up, which is a bullish sign. The only part that is of concern is the level that we are at. You can see over here this top line that I drew out. Well, that one there is over the last 5 years how high the MACD has gone, which has been, I don't know, it looks like it's about 5.2. And we're currently trading at 5.162. I mean, it had a little bit of a blow off there and actually penetrated above 6 and has since softened, but just this high level is somewhat of a concern for me as far as risk goes. The slow stochastics, we've topped and have come down and is now below its signal line. So, but it's still above 80, so it's still in a bullish posture. If it maintains this and comes below 80, that would be definitely more bearish. But we have a hold recommendations across the board. Going back to our website, looking at our current recommendations. Come on, computer. You can see here that we are currently on hold across the board on all of our positions. So we're just looking at the charts just to see what everything is doing. All right, so that's it for the S&P 500. Let's move on to the next one, which is the NASDAQ 100, symbol QQQ. And here we are right here, looking at the weekly chart. Look at the week the NASDAQ 100 had, 2.45%, very strong. This was in a rising wedge pattern, and it has broken above it, unlike the S&P 500. And it's still above it and making new highs and very, very strong. Coming down over here, looking at our momentum indicators, you can see that the MACD bottomed and came up and is above the signal line. Now look at that level. The level is 5.105, and going back 5 years, this is above the highest that it's ever been. So just that high level is of a concern on the MACD, because this is an oscillator and this is at the very end of the spectrum. It's got to begin to come down. And for the slow stochastics indicator, we're below its signal line but still above 80. So that is, well, it's a negative that it's below its signal line, but the fact that it's still above 80 is a bullish sign. Looking at the ETF, you can see that the price pattern is strong. So it's still strong on that ETF for the NASDAQ 100. Let's move down to our next one, which is going to be IWM. By the way, we use the weekly charts rather than the daily charts because the daily charts have too much noise in them. The weekly charts kind of take out the noise and kind of give you a better picture about what's happening with that stock market. All right, so this is IWM, which is the Russell 2000, which is your small cap stocks, small capitalization stocks. The week it went up 1.11%. You can see that right there. And here's your rising trend channel. It's really not a wedge, it's more of a trend channel, and we are right hugging the bottom support line on that trend channel. If it maintains this trend channel, it's going to end, and if it's going to follow suit with the other ETFs, it's going to bounce here and then come up for a potentially good rise on the next. If it doesn't hold through here and it begins to break down below that trend channel, well, then it could come down to this support line right here. And if it breaks through that, then your next support line is going to be way over here at about 125 level. And right now we're trading at 137.54. Looking at the momentum indicators, Okay, you can see that you are clearly in a downtrend on your MACD. Tried to go at bottomed here, tried to go above the signal line, failed, and now is still heading south. This is your weakest out of the United States stock markets. The small caps is the weakest. The strongest is the NASDAQ 100. On the slow stochastics, you can see here that we had tried to bottom, come back up, went above its signal line, but then has failed, came back down, is currently below its signal line, and still heading south. Although it looks like it has softened up a little bit on its momentum, so it could be finding a bottom in here and trying to come back up. That would make sense if this ETF is going to bottom right here at this bottom trend channel and then come up. That would make sense for this slow stochastics to then bottom, come back up, cross above its signal line, and go above that 80, and it would follow suit with the other ETFs in the United States stock market. Here we've came down reasonably well off of our highs, which was somewhere above 4, and we're currently trading at 2.35. So at 2.35, that gives this room to continue to move higher as well. So this if this is going to follow suit, then it would be not bad to get it here at the bottom of this trend channel, pick this up, and then get it on the rise coming up. So that this is definitely one to keep an eye on if you have not already entered into a buy position on this ETF. All right, so that's IWM, and let's go and look at our next one. Our next one is VEU. This is going to be your all world, excluding the United States ETF traded by Vanguard right there. And we went up 0.26%. The ETF has been trading very nicely. We were in a rising wedge pattern. We broke above that. We had a declining tops trend line. We broke above that, and we are still above it, closing above it for 4 weeks now. So this is very strong. The momentum indicators is strong as well. We are going above our signal line, and the distance between the signal line and the indicator is increasing, telling you that it's in a very strong pattern. As far as the slow stochastics indicator goes, it's since topped and kind of leveled out and kind of going flat, but still above 80. So strong pattern for VEU. If you have not entered into this position, you could enter into this position, and if you did, your stop would be at somewhere around 48.93, and that would be at about 2.74% from where we are currently at right now. And a way to enter into a position in which you don't currently have a position, let's say you wanted to get in on VEU or any one of the other ETFs. A conservative way to enter into this position is, let's just assume that you wanted to put, just for round numbers, I'll use $100,000. Let's say you want to put $100,000 into this position. You currently have a 0% position. Out of that 100,000, take about 25%, which would be 25,000, enter into the position, put your stop loss where you feel is appropriate, and let that ETF go, and then see if it goes up or if it's going to come down and stop you out and take a small loss. If it goes up 2%, you can take your stop loss, move it to your buy point, and enter in another 25%. And continue to do that until you're 100% invested in the ETF. That way, if your timing was off and you happen to buy right here, you're just going to take that 2% loss, as opposed to taking the loss from here all the way down to, on a closing basis here, which would be 23.48%. So that would be a conservative way for you to get in with minimal risk. All right, let me take out that inspect mode. Let's go over to the next ETF, which is TLT, 20-year Treasury bonds. And I know this is possibly kind of confusing. There's a lot going on in here. I'll try to break it down step by step. So here is your price pattern for the ETF. You have a declining tops trend line that has been in place since just July, August of 2016. Okay. And last week, if you recall, I said we were looking at let's look over here in the thumbnail. All right, so right now we're looking at that red bar is our current week. Last week we were looking at this white bar and we closed at the high of the week, which is right here. Now, I said to you, because I'm looking at this declining tops, if you're a trader, you could exit the position now, locking in your gains, waiting for the ETF to get above this declining tops trend line, and then you could enter into it again. And that way you would at least protect your profits that you had coming up to this point. As an investor, you just want to sit tight and give the ETF the benefit of the doubt and then see if it's going to go up. So that's how we play that. On our momentum indicators, we are strong. Your MACD is bottomed way over here, which is actually on our buy point of 117.19. What are we trading at now? It's at 123.48. Okay, so there's our buy point. We want to see it, go above this declining tops trend line. If not, if that fails that, then we would expect it to come down, touch this support line right here, and then bounce, and then hopefully try again and go through it. Eventually, it's going to go through it. We just don't know when, and it hasn't gone through it yet. And it's been it's been a while because it's started way over here, somewhere towards August of 2016. So it hasn't been a year yet, but it's been a while. Okay, so that is on TLT. Let's move on to our next one, which is VNQ, which is real estate. And we are looking at the Vanguard REIT, VNQ, and it had a week 0.57%. Oh, by the way, here is your yield. Your current yield is 4.42%. Nice, healthy annual dividend for an ETF. Okay, and here you have a declining tops trend channel, and we have pretty much closed right on it. And we're waiting to see, is it going to continue on to this next resistance line, or is it going to fail this and come down? We were in a kind of a wedge pattern here that we were forming, and it was either going to break down or break up, and we're right at that upper trend channel, resistance channel right there. So we're waiting to see what this is going to do. It broke above it here, but then it failed at this point and then came back down into it, hit support, and then bounced up. So that is, we're on a wait and see what VNQ is going to do. Now, looking at your momentum indicators, you can see all the confusion here that the traders have had. Came up, came down, came up, came down. You can see it in the price pattern as well. Came up, came down, came up, came down, and then we come up a little bit. And we're trying to see what it's going to do. So there's confusion of how strong this is. This is right here. We're right close to the zero line, so it can go in any direction from the MACD's perspective. On the slow stochastics perspective here, you can see that we've bottomed, curled up, and have we crossed the, we haven't not technically crossed the signal line, but we are very close. One more week of positive gains and we would cross the signal line for VNQ. So we're on a hold recommendation for that one as well. Let's move on to our last ETF. This is gold, symbol GLD. Same thing, weekly chart, 5-year time horizon. We have a long-term declining tops trend channel, and we are getting right up to it. We're trying to see if this ETF is going to break up or break down. From the MACD's perspective, It's on the top, came down, and it has bottomed and is now rising up. That's a bullish sign, and we're right at zero. So there's plenty of room for gold to break above this and continue to run. From the slow stochastics perspective, it's bottomed and it's above its signal line. These are both bullish signs. So from the momentum indicators perspective, it looks like it finally is going to break above this declining tops trend channel and go up and continue to go up. Its next resistance line would be somewhere around 130. And from a percentage point, let's put on our indicator there, and let's see what that would be. That would take you to about 7.62%. Before we would show some signs of resistance, which would be right in this area right here. All right, so that, and we're still on a hold recommendation for GLD as we are with everything else. Let's move on to our next indicator, which is going to be the VIX. Now, what the VIX is a volatility index for the S&P 500. So there's your symbol right there, $VIX, and basically what happens is if the VIX is going down and weak, it is bullish for stocks. So as the blue, by the way, the blue is the 50-day exponential moving average. The red is the 200-day exponential moving average. So you have the fast moving average and the slow moving average. The blue, the faster moving average, is below the red, and the indicator is below both moving averages. All of this is bullish for stocks. And what else can I tell you? Oh, this particular chart, we no longer are on the weekly. For the VIX indicators, we use the daily time chart. I believe this is a 1-year time horizon. All right, so this is all very bullish for the S&P 500. So that's bullish for United States stocks right there. I want to look at our last chart of the day, which is going to be VXN. Now this is for the volatility index for the NASDAQ 100. So it's symbol $VXN, volatility index for the NASDAQ 100. Similar to the VIX, the VXN is also very bullish for the NASDAQ 100. The faster moving average is below the slower moving average. It's still heading down. The indicator is in a range even below both moving averages. All bullish for stocks. And you can see here, this is your price chart for QQQ, the NASDAQ 100, and a bullish uptrend. It's strong. So that's all of our charts. And this is Conservative ETF Investor. And again, here's our recommendations. I hope you enjoyed this week's video, and I hope to see you soon. Please subscribe to the channel. And this is Ken signing off. Thank you.